This video is for guidance and education. Please make sure you watch the full video to the end, because the later sections explain the key risks associated with different types of investments and will help you make more informed decisions before putting your money anywhere.
Welcome to this explainer. Today, we're decoding a massive financial shift from the Central Bank of Nigeria. Institutional monetary policy can often sound like, just distant economic theory. But we're going to break down exactly how these high-level decisions travel directly from the CBN's boardroom right into your pocket. Let's get right into it. Okay, let's dive into this. It's a question we should all be asking. How does a central bank decision actually affect your personal savings? It is incredibly easy to tune out when the news starts talking about institutional monetary policy, right? But here's the thing. Those abstract policies have a very real, very direct impact on your personal wallet. What the bank decides at the top literally dictates the value of the money in your hands today, and more importantly, how that money can grow tomorrow. Part 1. The big policy shift. A 7-year ban finally lifted. So the big headline news here is that the Central Bank of Nigeria has officially reopened open market operations to domestic investors. And that number, 7, is absolutely vital. For 7 whole years, this specific financial market was heavily restricted. Everyday Nigerians and ordinary domestic companies were completely locked out of this investment avenue. So opening these doors after almost a decade, that is a massive shift for anyone looking for serious ways to invest and protect their wealth. Part 2. What is OMO anyway? Let's de-jargonize the financial talk for a second. Open market operations, or OMO as it's commonly called, is simply the CBN's primary tool to control the amount of money moving around in the economy. They do this by selling short-term securities. Now, as you probably know, excess Naira floating around the system fuels inflation and puts immense pressure on the exchange rate. So OMO is basically the heavy-duty mechanism the central bank deploys to aggressively pull back that excess liquidity and stabilize the broader financial system. Moving on to Part 3. How OMO fights inflation, the mechanics of money. And this brilliantly illustrates how the whole thing works. It essentially acts like a giant sponge. The central bank issues these short-term securities, and then commercial banks or investors hand over their cash to buy them up. By literally pulling bags of Naira out of the banking system, there is suddenly less money chasing the exact same amount of goods and foreign exchange. This directly cools off inflation and eases pressure on the currency. It's really an incredibly effective lever for restoring macroeconomic balance when the system is just running way too hot. Part 4. What has changed? Looking at 2019 versus today. Back in the 2019 restricted era, participation was tightly limited to just a few selected players. The strategy back then was basically to force banks to lend more money to the real sector, meaning everyday businesses, and to actively drive down interest rates. But under today's open framework, the dates are wide open again. Eligible individuals, companies, and non-bank financial institutions can once again participate in both the primary and secondary OMO markets. And the best part is, you simply do this through your deposit money banks. They're the ones who will submit the bids and settle transactions entirely on your behalf. Which brings us to Part 5, the pocket impact, why this actually matters to you. High OMO yields offer a highly lucrative alternative to your standard low-interest savings accounts. For years, you might have felt like your idle funds were barely keeping up with inflation, right? Essentially just losing purchasing power while sitting in the bank doing nothing. Well, this policy shift completely changes the game. It makes short-term investments incredibly attractive again, giving anyone with spare cash a really powerful new tool to grow their money safely and aggressively. So, who exactly benefits from this newly open window? Well, it's actually a pretty wide range of everyday groups. We're talking about salary earners looking to get a safer, much better return on their hard-earned money. Cooperatives who are pooling their members' funds for accelerated growth. Small business owners who might have a bit of excess cash waiting to be deployed. And of course, corporate treasurers actively managing company capital. All of these groups are constantly searching for safer short-term returns, and now they can finally take full advantage of this incredible opportunity once again. All of this leaves us with one really vital question. Are your idle funds in the right place? Now that this 7-year restriction is completely gone, the financial landscape has shifted entirely in your favor. If you aren't actively rethinking your personal financial strategy to take advantage of these newly opened doors, you might literally be leaving money on the table. Thank you so much for joining me for this explainer, and I really hope this helps you navigate your financial future with absolute clarity.
If this message opened your mind, don't keep it to yourself. Subscribe to Master Sense by Faraday, hit the like button, and share this video with someone who needs wisdom, clarity, and inspiration today. Turn on the notification bell so you never miss our next powerful lesson. Remember, knowledge becomes power only when you act on it. See you in the next video.
Welcome to The Explainer. So today we're diving into a massive financial policy shift coming straight from the Central Bank of Nigeria. We are talking about the reopening of the OMO market. Now, if you're hearing those letters and thinking, oh man, this is just some dry, high-level economics meant for bankers and boardrooms, well, think again. This shift is specifically designed to ripple through the entire economy. And honestly, understanding it can actually open up some really fascinating opportunities for you. We're going to completely demystify exactly what this means for your daily life, your savings, and most importantly, your pocket.
And look, this isn't just some wild internet rumor or theoretical idea. The Central Bank of Nigeria has issued a sweeping official directive reopening the OMO market. What makes this such a huge deal is that this specific door has been slammed shut for 7 long years. For nearly a decade, this pathway was completely closed off, but now the CBN is turning the key, opening it back up. And these directives are taking immediate effect. So we're dealing with real-time, highly impactful financial news that's literally reshaping the landscape as we speak. That brings us perfectly to Section 2. Options for your pocket, how you can benefit. Now that we know what the tool actually is, let's bring it straight down to street level. Suddenly, new doors are flying open. For the everyday individual, this means you might now have access to brand new short-term investment products right through your local bank. If these OMO rates are attractive, you have the potential to earn significantly better returns than what your basic run-of-the-mill savings account is giving you right now. Ultimately, this is a huge win for financial inclusion. It allows the common man to finally participate in high-level money market instruments that for the last 7 years were just much harder, if not totally impossible to access. You know what's really fascinating here? It's the psychological effect of this policy. It's not just about the yield you get, it's about building the habit. Having access to these kinds of products practically encourages highly disciplined money management. Households, cooperatives, and small businesses can start looking at their income totally differently, planning around structured savings rather than just leaving cash sitting idle and losing value. It really fosters a much stronger savings culture. But hold on a second, let's slow the pacing down slightly for Section 3. The catch for small businesses, the double-edged sword. Because, let's be totally objective here, this policy isn't automatically a massive victory for everybody. And this brilliantly illustrates the two very different realities a small business might face starting today. On one hand, if you're a business owner with surplus cash, say you're saving up to buy some new machinery next year, you can park that money in risk-free OMO securities and actually earn returns while you wait. That's a huge positive. But if you are on the other side of the fence, a business that desperately needs capital right now, you might be in trouble. You might face tighter, much more expensive credit, because banks are going to shift their money toward those same safe securities instead of lending it out to you. Listen to this direct quote from the analysis. If banks and investors prefer buying CBN securities because returns are attractive, banks may become less eager to lend to businesses and individuals. Right? I mean, it makes perfect sense. If a bank can get a guaranteed risk-free return directly from the central bank, why in the world would they take a chance on a risky loan to a startup or a local trader? This is the core risk here. Access to loans for working capital or expansion could become significantly tighter. Okay, zooming back out to the broader economy, we hit Section 4. Impact on inflation and Naira, the macro effect. Because remember, the central bank's ultimate goal isn't just to hand out an investment product, it's to fix the wider economic health. So, this is the literal million Naira question, isn't it? As an everyday citizen facing super high market prices, you want to know, will this central bank absorbing all this excess cash actually translate to a lower cost of living for you at the grocery store? Let's just walk through the exact logic here step by step. Step 1. The CBN uses these OMO securities to aggressively absorb that excess cash out of the system. Step 2, as a result, there is literally less money in circulation chasing the same limited amount of goods. And Step 3, according to basic economic principles, this directly reduces inflationary pressure. As prices stabilize, investors see that monetary policy is actively being managed, which ultimately supports broader confidence in the Naira. So, the crucial point is, we really need to manage our expectations here.
The effect of this policy is absolutely not going to be immediate. You are not going to wake up tomorrow to half-price groceries. Why? Well, because the money supply is just one single piece of a giant puzzle. Inflation in our economy is heavily driven by real-world, on-the-ground issues. Food prices, skyrocketing fuel costs, exchange rates, logistics, supply shortages, and insecurity. OMO is a powerful tool for sure, but it can't magically fix a broken supply chain overnight. All right, it's time to pivot and get intensely practical with Section 5, your personal action plan, what you should do next. We've covered all the macro and micro details, but how do you actually navigate this?
We've got a direct checklist pulled right from our source material on exactly what you should do right now. Because it's not enough to just know the market is open. You need a highly proactive strategy to make sure you are protecting your funds while getting the best yield possible.
Let's rapidly run through these smart investment steps. First, pick up the phone or walk right into your bank and ask if individuals can participate and what that minimum investment amount is. Second, do not just jump at the first offer you see. Compare the MO returns against what you get from Treasury bills, mutual funds, or standard fixed deposits. Third, and this is absolutely crucial, do not invest your emergency money. You have to understand the maturity period. If your money is locked away for 90 days, you literally cannot touch it. And finally, stay safe out there. Avoid any person, app, or platform promising you totally unrealistic returns just because they threw the buzzword MO into their marketing. I want to share this concluding thought from the analysis because it really hits the nail on the head. It is a reminder that national financial policies eventually touch the pocket of the market woman, the salary earner, the young graduate, the small business owner. I love that. This isn't just news for economists in suits. Whether you're stretching a monthly income or trying to keep a small shop afloat, the decisions made at the central bank ultimately shape the value of the money right there in your hands.
So what does this all mean? If managed well, this reopening creates incredible opportunities for a much stronger savings culture and way better investments. But it requires you to be cautious, informed, and highly intentional. So I leave you with this provocative thought. In a tough economy where absolutely every single Naira matters, how will you use this newly reopened opportunity to secure your own financial future? Thanks so much for joining me on this explainer. Stay informed, stay proactive with your money, and I'll see you on the next one.
If this message opened your mind, don't keep it to yourself. Subscribe to Master Sense by Faraday, hit the like button, and share this video with someone who needs wisdom, clarity, and inspiration today. Turn on the notification bell so you never miss our next powerful lesson. Remember, knowledge becomes power only when you act on it. See you in the next video.